Hey everyone, it's Mike Brown with Alpha Mortgage, the mortgage broker on your side. And almost every day, at least every week, I get questions about what are interest rates and how are they determined. And when the Fed raises their rates, does it raise your rates? So, interesting couple things here. Number one, when you hear on the news that the Fed raised their rates, that doesn't directly affect a mortgage interest rate. It can ultimately, but what directly affects a mortgage interest rate is the trading of mortgage-backed securities. So there's big pools of loans out there, and they will commit to buy a certain amount of loans at a certain price. For example, 5%, and so lenders will commit to that, commit to selling. So that's the biggest contributor to interest rates. But right now the biggest purchaser of mortgage-backed securities is the Federal Reserve. So it's kind of being falsely propped up and has been for a long time. Recently, they were talking about decreasing the purchase of mortgage-backed securities by the Federal Reserve, which put a lot of fear, and that's what made the interest rates rise so quickly this past year. But they've actually dived back into it right now, and we're seeing them buy more still, and they're not having a net decrease on their balance sheet. But anyway, the question of interest rates. What really affects interest rates is, or what you get on an interest rate, is a number of about three things. One, the type of loan you get. Are you doing a conventional loan? Are you doing a VA loan, USDA, FHA? So it's the type of loan. The credit score. Credit score is a big contributor to an interest rate. So the higher the credit score, the better. And then finally, the loan to value. How much are you putting down on a new home, or if you're refinancing, how low of loan to value is it? So, for example, on $100,000, if you're only financing 60,000, that's a low loan to value. It's 60%. If you have a good credit score over 740, you're going to get a really good interest rate. But you don't have to have credit scores that high or that large down payments to get a good rate. FHA can give you a good interest rate with only a 3%, 3.5% down payment. You can still get a great fixed rate. It will have private mortgage insurance for life of loan. That's a new thing they've done in the last few years, is kept private mortgage insurance. But that private mortgage insurance is decreasing every year based on the average balance of the loan that year. So again, if you ask someone what the interest rates are, that's a tough question for anyone to answer. If they give you a number, they're pulling it out their tail, because you got to know type of loan, credit score, loan to value. You got to know what I mean. There's so many things you got to know. And when the Federal Reserve raises their rates, no, it doesn't directly affect if our rates are going up or down. It is the trading of mortgage-backed securities. But again, if you have any questions about interest rates, call a mortgage broker or mortgage professional. They'll ask you some questions and be able to quote you something that can let you run your budget numbers on. So again, Mike Brown, Alpha Mortgage, the mortgage broker on your side. Give me a call anytime. Have a great day.